this is Chase McWhorter, Managing Director, Institutional Real Estate, Inc., former Managing Director on the institutional investing and infrastructure side, now Managing Director, Institutional Real Estate Americas. The purpose of this video is just to review the last 3 months of virtual roundtables we've been hosting, both on the Institutional Real Estate Americas and Institutional Investing and Infrastructure. Our virtual roundtable series, we've been hosting meetings weekly with 10 to 15 investors, consultants, and our publication sponsor managers. The purpose of these meetings, we always give the attendees, is one, from a pure business function for us. This is important to keep track of how the industry is thinking about things. We as a firm always want to hear what you're thinking, what your concerns are, rather than us thinking up interesting things to write about and presenting it to the audience. So thank you for everybody that's participated the last 18 months in these meetings. This video is going to be just summarizing the last 3 months, and then capping it off, we had our in-person Institutional Real Estate Americas Editorial Advisory Board meeting 2 weeks ago in Laguna Beach at the beginning of September. So got some good feedback from that meeting as well. So again, a lot of backstory to explain where these key themes came from, that these aren't just my thoughts. This is what you guys have been talking about in the industry. So I would say, to start, something that's overlaps infrastructure and real estate. A couple things is, I think, the evolution of not necessarily COVID from a scientific standpoint, but how to manage and still conduct business. So I think from that standpoint, it seems like there's been a mental shift towards just sadly assuming it's going to be with us for a long time and making adjustments accordingly. So I think that's been a key shift that we've seen, is just making assumptions. There's going to be variance. It's going to be with us for a long time. So how can we move forward with that in mind? A lot of firms starting to go back to in-person offices, starting to travel, but definitely still managing risk where they can. Other things that overlap infrastructure and real estate, I would say broadly, since moving over to the real estate side, is more of a real assets perspective, it seems, coming from the investor community, not really being too concerned with what bucket things fit in, but wanting just to take a more holistic view of real assets. And candidly, that's kind of how we've looked at it, with myself moving over to Institutional Real Estate Americas from infrastructure. Has been interesting conversations because of the overlap with things like data centers, I would say, being one thing that really kind of is in the middle between infrastructure and real estate. Cold storage, and this definitely varies by region, Europe or the Americas or Asia, just how groups look at it. So taking a real assets look at things when it comes to ESG. So again, something else that overlaps is the ESG DEI discussions and how those have evolved. Wrote in the recent or upcoming Institutional Real Estate Americas editorial some of the key things we've heard during these meetings that are off the record, just as far as how groups are managing and implementing ESG policies. I think there's still a concern as far as this stems, I think, a lot from the equity side, public equities, as far as just slapping an ESG label on a fund. And how does that happen in private equity, infrastructure, and real estate? So that's maybe a medium term concern, is the greenwashing aspect of ESG and what groups are actually implementing things versus just trying to use it to raise capital. Things specific to infrastructure, I would say the main theme from this summer, a lot of conversations that we had to do with kind of broadly the transition, infrastructure going into a new phase and what that transition looks like. structurally from continuation vehicles, moving to single asset, separate accounts, club deals, moving to open-ended funds, just broadly a lot of discussions around this transition as funds are closing. How do you keep the assets you really want? What's that transition look like? So in the 3 months of holding those meetings, I would say month and a half was really about just that topic, a lot of discussions. I'd say the other theme from these infrastructure meetings has been the constant debate of renewables versus traditional energy with where things are priced at. There's concern between digital and renewables that things are getting very pricey. How can you keep underwriting those deals? And now managers trying to find different ways to access things like renewables, building out platforms and then selling them out down the line. Jumping over to the real estate side, I'd say things that are specific to real estate, a lot has to do with, I would say, two key trends that keep coming up are this move to niche property types and how that relates to benchmarks that are still heavily with office and things like that. And I think to simplify the niche property types, a lot of groups, this is groundbreaking, but just view it as offshoots of the traditional property types. Life sciences being an offshoot of office, data centers being an offshoot of industrial, that you're not really reinventing a lot. It's more just kind of the function that these properties are being used for. But there's definitely a shift to groups trying to really get into the niche property types. And then how that impacts benchmarks, I think, is the next phase. So how are you, obviously comparing yourself to other more traditional funds? Pricing, similar to infrastructure, continues to be a concern with things priced to perfection. In real estate, I think it's a little bit different because now you're really seeing a lot of discussions about a shift moving over to debt with where equity is priced at. Do you just make the move over to debt to be a little bit more secure? And then the other trend in real estate is the suburban to urban, or reverse that, urban to suburban discussion, which has further been broken down from primary city, secondary to suburban. So it's more 3 tiers versus the simple urban to suburban. And I think there's no consensus. It's still an ongoing discussion. I think what we continue to hear is, how does that, have you been in those markets or are you chasing those markets? I think is the concern from the investors is, do you have any experience there, or are you just running? And then if you have experience in core primary urban markets, I think the idea is just stay there, because you always hear New York's always going to be there. So using that as an example, if that's where your expertise is, then stay there, and eventually the world will shift back. I would say the last theme before letting everybody go that's been listening to this video is the very fun discussion of inflation. Is it here? Is it coming back? Is it transitory? I think a lot of people get frustrated when we have these conversations, but I think we've approached a lot of these discussions more tactically, as far as how do you prepare, as far as hedging lumber costs, building up your supplies, whatever it might be. It's not economist theoretical discussions as far as, is it here? Although someone did say that they don't like the transitory discussion because it can transition, but it can take 3 years. So that can be a pretty long transition. So I think those are some of the main things that have been discussed the last 3 months. And then in person at the editorial board, from IREI's perspective, I think it is worth noting, again, how useful these meetings are for us to just keep tabs on what you're thinking versus us being in our own echo chamber. And then from a business standpoint, we've moved to doing in-person meetings, again, starting with our meeting in September for the Americas editorial board. We'll continue through the fall. So hopefully we'll be able to see more of you in person, but we will be continuing these roundtables through the fall, winter, indefinitely. So thank you, and good night, good evening, good morning, wherever you are. Thank you.